Welcome everyone. Chapter 15, Reasons for Business. From this lesson, we are going to find out the main reason why business is going to fail. Therefore, it is a very important lesson because everyone who are right now we are having a business, this is definitely important for you. If you are plan to do a business in future, that also really important for you. That's why in this level, you are going to learn whatever the person who will listen in this video, listen this lesson. So it's a very important lesson. So reasons for business failure. If you avoid these problems, if you avoid these reasons, then you can always be success in your business life. Okay, so we are talking about the first of all the getting started. You can see, unfortunately, when entrepreneurs set up a business, the chances of failures are greater than those of success. That is definitely because we can agree with that, because chance of failure is greater than the chances going to success. For example, in 2009, UK, there are 206,000 new businesses were started, right? But 2013, right, in 98,000 of these were still trading. You can see the percentage around 236,000 business, only 98,000, like less than half only still trading. This means that 58%, they calculate the percentage also, 58% what happened? Failed within 4 years. Failed within 4 years. That is a normal way. After 5 years, we say this is 4 years. After 5 years, normal tradition is like after 5 years, only 80% business fail. 20% only survive. That's the thing, 80-20 concept. So 80% business fail after 5 years, 20% business only succeeded. So we have to find out for the why 80% business fail. There's a scientific reason, right? There are certain reasons. We are going to investigate the reasons for business failure from this lesson. So business can fail for a variety of reasons. For example, they can run out of cash, they are unable to raise finance, and they lack in competitive edge, or they fail to adapt to changes in the market. Okay, look at this example, the PepperTap, right? PepperTap is a, can see Naveen Singh is established a PepperTap in India in 2013 using a simple business idea. By using the app on a mobile phone, the people would order food from local shops and get delivered very quickly. It's like a Uber Eats, right? Something like that. And then the Naveen and his team were convinced that the simplicity of the idea, which provided shoppers with a speedy and convenient delivery service, would be a success. By 2015, the business was thriving, right? That is after 2 years. The PepperTap was operating 17 different cities and enjoying daily orders, but 20,000 plus orders, right? It was one of the top 3 food delivery services in India. However, in 2016, it closed down. After 3 years, what happened? It had to close down. There were 3 key reasons for the failure. Look at this wonderful case study to understand. It's nice online business. Only how long it will there? Only 3 years. And they find out main 3 key reasons why business failed. First, some local shops struggle to provide accurate information about their stock range, for example. To the app, in some cases, essential items were missing. It was often a struggle to persuade the smaller stores to adopt electronic inventory management and billing. There was no problem with large stores because it was possible to link up with the electronic systems that they were already using. However, the failure to provide customers with up-to-date information was a serious weakness. It's like that. Imagine, like, if you want to actually do something, like we want to order something, the it mentioned that the it was available in the stocks, but actually when you go there, that is the inventory level, the food inventory, everything they haven't updated, right? For example, let's say one shop is there. For example, you want to order some kind of a, let's say fried rice in some shop, but the problem is there is no enough fried rice in the they are not, haven't updated. When the customer, then they go to pick up the order, the customer already ordered something, and then they got, let's say, someone customer ordered 10 fried rice, and they go there, the shop, they say, okay, we can't deliver this thing. Sorry, we don't have any food left. So then what happened? Customer dissatisfaction, right? And customer already made the payment also. Then what happened? We have to refund the payment back to the customer. Customer unsatisfied. So this will be a real bad example for the website also, that people will say, I order from this website, but normally what happened, they reject the order. They say there's no inventory, my order cancelled. So many incidents happen like that. That's for number one is the lack of enough information. The second one, the PepperTap began to use generous discount around about 20% to attract new customers and keep existing ones loyal. The idea was to invest heavily on discount in the early stages of trading and then recover some of these costs later when the large bank of loyal customers had been established. However, the discounts were proving expensive. That's always available if you order something from Uber Eats. Also, they are sometimes they're giving today, if you order more than 1,200 or 1,500, there are 500% discount, right? So it's a 500 rupees discount, 200 rupee discount. Sometimes they are giving this to like a promote some, some new customers to promote this thing. They are giving this discount in the early stage of business, but this causes a financial burden for the organization at the early stage. Yes, you have to promote the business, but sometimes it is not unbearable expenses are there for them. And third one was the cost of maintaining high staffing levels to meet the delivery commitment, right? Sometimes they have used their own delivery people, like the fleet of vehicles, which is like a courier company. Sometimes they should be able to actually hire another third-party courier company service. But what happened? They have to hire their own service, own staff members. It is another expensive, increase the amount of labors and then payroll and the overhead costs as a result of that. And PepperTap promised to deliver food, right, within 2 hours, right? So normally there's a condition within 2-hour delivery and order being placed. And this was far quicker than any rival. However, Naveen and his team felt that they had an advantage over their competitors in making their delivery operations more efficient. This is because them had previously worked in this area and cost would eventually fall. Right. So basically, these are the main 3 reasons: the overhead cost increases and the discounts cost increases, and also the customer, the systems of the small, sometimes some business partners, they haven't updated their inventory levels. Therefore, the information available for the customers is wrong. There's some kind of like technical problems, right? So these are the main reasons this is cost eventually falls. So now we identify these problems, but the PepperTap tried to solve all 3 problems at the same time by closing down operations in some of smaller cities. So they decided to close some small cities because they have high expenses. Even though orders rose around 30,000 a day, losses were being made on the most deliveries and cash was disappearing fast, right? Cash disappearing fast is too much of expenses they had to make. And the PepperTap was forced to close down because it could not operate competitively in the market. It's a really wonderful case study to understand. It's an innovative business, but main 3 key reasons like lack of information and the discount process and also the staff cost. Main 3 reasons they have faced. So as a result, within 3 years, they had to shut down the business operations. Okay, main 3 questions they're asking: why did the PepperTap fail? And what measures might have been taken to avoid the failure? It's important what they can do in order to avoid this. Right. So basically, we'll see why this fail and what can they do in order to make sure to avoid this kind of a business failure. Right. Let's go to the market scheme and see why did the PepperTap fail. Right. Leon, can you read the answer, please?
Businesses may fail for a number of reasons. In this case, there are 3 specific reasons. First, the PepperTap had problems with some of its partners, retailers. They failed to adopt the necessary technology to keep consumer information up to date. This meant that customers were not getting the quality of service they needed. Second, the PepperTap was offering high discounts to try and enter the market. This quickly used up the company's cash. Finally, the cost of maintaining high staffing levels to meet delivery commitments was also expensive. The PepperTap promised to deliver groceries within 2 hours of an order being placed. This was far quicker than any rivals. However, Navneet and his team felt that they had an advantage over their competitors in making their delivery operation more efficient, since some of them had previously worked in this area and costs would eventually fall. As it turned out, the PepperTap was unable to find fast enough solutions to these problems and they ran out of cash.
Exactly. The main 3 reasons, mainly actually they're running out of cash. They have 3 reasons, mainly the information problem, and also the second one is a discount they are giving, so that also not bearable. And then third one, they have their own fleet of delivery, which is unbearable for them. So these are the main 3 reasons they run out of cash. So main reason for the close, that I think they're unable to right, makes fast solutions to actually avoid these problems. Okay. Second question, you're asking what measures that they have taken to avoid this. Initially, perhaps what they can do is avoid the using retailers that were not able to adopt the necessary technology, because you can give chance for like one chance or something, then automatically you can make the some suppliers as a default supplier, because uh, sometimes they have to feel that the business, because it's a very unpleasant incident. For example, one customer ordered from that business and they say we don't have enough food. So it's very you have to give one chance to the shopper, and then after that, if you're making continuous errors like that, if you're not updated system, if you're not adapted to the new system, I think the organization has to take a decision, okay, not to allow them again on trade, because this kind of unpleasant incident, what happened, the ratings, the reach of the website can go down. So it's the main reasons. Therefore, the supplier credibility is really important in that case. Secondly, this may slow down the growth of the business, and but quality have been maintained. They could also have reduced the discount. So this is another thing. So they're giving massive discounts in the early stage of the business, but I think they should have reduced the discount, because giving discount is a good thing for promotion. But the early stage of the business, I think giving like a wide amount of discount sometimes not good for the small business like Naveen, right? But it's like a company like a Uber and all that big like multinational companies, it is okay because they have enough money to give the discount for the customers. They're offering, which cost a lot of money by giving this discount for a small startup company like this. So instead of offering by 20% discount, perhaps they can say, okay, just offer 10% discount, right? So because 20% is, I think, it's a very heavy discount, right? For a small company, it is unbearable. And finally, the staff thing, there are 2-hour delivery promises too challenging, right? So although they were probably trying to get a competitive edge, in this case, it is necessarily to be realistic and get targets which are achievable targets, like 2-hour delivery. Sometimes that companies like Pizza Hut, Domino's, they are doing half an hour delivery because they have one fleet of vehicles, but riders are there. But this kind of a thing, I think you have to give some kind of like enough time, like a 2 hours, also like a very good amount. But think about the practicability of this decision like that. I think if you can, again, if you recheck about these 3 key reasons for a failure, I think you can avoid these problems. Okay, so in this case study, what we can learn, their business are failing, right? But they are, we have to identify what are the reasons of failing, and we have to find out how can we manage those failures. Basically, business failure, we can define like this. So in my short note, I'll show you the business failure. Basically, we call the business are no longer able to trade because they are making loss or run out of cash, right? In chapter 15, business failure definition is given. So firstly, we are going to identify today the first reason why business fail, because of the run out of cash, financial situation, financial problems they create. So according to that, you can see there are number of 9 reasons are given here why business fail, because of the why they run out of cash. 8 reasons I have given: over trading, investing too much on fixed assets, allowing too much credit, over borrowing, seasonal factors, unexpected expenditure, external factors, and poor financial management. These things one by one, we're going to analyze now. There are certain reasons, for example, we're not competitive and everything. So, but first of all, the first reason is why business actually run short of cash, why run out of cash. 8 reasons we are going to identify from here. So you can see the precise rate to business failure across the world is difficult to identify, right? So normally we say that in the previously identified about 58% of the new business fail after 4 years, right? Like most recently, according to the Consensus Bureau report, that about 400,000 new business was startup in USA during 2015, but out of that 400,000, 470,000 right, business were failed, right? Basically, one thing is certain, that some of these statistics failure rate is very high, right? Business failed for a variety of reasons. One common reason is money, right? Run out of cash is money. If you search about the internet, there are so many examples are there. Like recent example, 2019, 178 years old company called, the huge company, right? Thomas Cook, right? 178 years old. It was failed. And then after that, the business has to take a no by a Chinese business called Fosun for 14 billion pounds, right? The main reason for that is not the money. They run out of cash also, but basically they are not competitive now. The second reason, right? They actually when the other traveling companies, they allow online facilities for their customers, but Thomas Cook still depending on the analog methods, like they wish customers to come to their office and discuss all their trips and everything, which is like old system. But main reason is that, and there are so many other reasons, but like that, there are certain case studies you have to follow, the business failure reasons. These cases, if you follow, I think you can get a good idea about why this business failed, and you can find out the reasons that you can, when you start a business in future, then you can find out you are not going to do the same mistake again, right? So basically, they try not to attract crucial funding later date. So effective financing planning is very crucial. Entrepreneurs need to ensure that the business has enough money to exactly what is needed. Okay, cash flow problems. There are 8 reasons, as I told you, why cash problems are coming, why people like business run out of cash. This one reason is number one, overtrading. What is overtrading? It's kind of a technical word. Overtrading. Young and rapidly growing businesses are particularly at risk of overtrading, right? This occurs when a business is attempt to fund a large volume of production with insufficient cash. This can happen even if a business is profitable, right? This problem is that the cash run out fast because the spending is more on the resources. To meet rising number of orders, established companies trying to expand too quickly and can also face this problem. So overtrading means, you try to actually grow the business too quickly, right? Normally we have a saying, slow and steady wins the race. But what happens overtrading means sometimes you go over the capacity, sometimes you want to buy more assets and you want to actually do more expansion, right? So, and eventually fail. One of my friend, he actually started a business selling textile business. In the first month, after 2 weeks, he started the business. He opened up another shop in the same town, right? He has to hire another workers, another rent, right? He thought the business is okay, but what happened? Eventually failed. Business was there, survive only about 3 months, right? And after that, another situation happened. There was a shrinkage happen, and one night, one burglar, he came, and on thief, he taken all the stocks from one shop. So he was disappointed and not happened. Now he closed down all 2 shops. Like that, the one reason I'm telling. So like that, certain reasons are there why you're running out of cash. Overtrading, sometimes if you manage one shop for like a couple of years, I think that you have collected some enough money. And then if you open up another shop is okay. But taking out another bank loan and open up another shop, expanding another branch will be a risky decision, right? And the profit margin you have to think about, can you pay back the loan again, right? If you take a leasing facility, can you pay the leasing facilities again? Like this, overtrading is a problem. When companies trying to expand too quickly, they have to face this problem, right? Second reason why business fail, cash flow problems coming, is investing too much in fixed asset. Investing too much in fixed asset. When business first start trading, funds are very limited. Spending large amount of initially on equipment, vehicles and other capital items can quickly use the resources. It may be better to lease some of the fixed assets to protect the cash reserves. I think, if you start a business with all your money, right? And if you buy everything for cash, like, vehicles you bought on cash, right? Land you bought a cash, like everything what happened? Money will quickly drain. But if you have this facility without buying your own vehicle, you can go for a leasing facility if you exactly want a vehicle. Or without buying your own vehicle, you can rent a vehicle for the first few years, right? Without buying a land and a building, right? We can first of all, you can actually rent a place first of all the first few years until you establish a business. Then if you have your money, you can buy some small place later on with your money, right? If you have like that, normally investing too much money to acquire assets like that, it is one major reason why a lot of people are failing. They're thinking having your own money, own assets, own resources are important. No, doing business is the greatest thing is actually you should earn something like, you have to spend other people's money. In that case, for example, taking loans or lease facilities, renting someone like properties and everything, that's ideal decision because you are not using your own money. You're not using your resources. You're using others' resources for your business. That's called the smart business, right? So there are certain examples are there. Therefore, I think the best decision is not to invest too much in fixed asset. What does fixed asset mean? The resources that used to repeatedly for a period of time by a business, such as property, tools, vehicles, machines. Sometimes in accounting we call non-current assets. non-current assets, the assets that you can keep for a long time with you, property, plant, and equipments. So this property, plant, and equipment, you don't need to acquire. The first 5 years, you don't need to acquire. Right? If you have enough money, no problem. But the problem is you have a startup business. The money is really important. You have to save that money. That's why a lot of people, they're going for renting options, leasing option, hiring options, and everything. So only they have to invest on the real, like a current assets only, like stocks and inventory, like, and also staff expenses, overhead expenses, everything. Then you have enough money, working capital is available with you. Therefore, please avoid wasting too much money on fixed asset. And third reason is allowing too much on credit. This is the one reason why a lot of business fail, allowing people a lot of credit facilities. In today's business world, credit transactions are very popular and common. Credit transactions are because of credit transaction, only business are surviving. Sometimes 6 month credit, 6 months, sometimes 2 months, 3 months, 4 months, like that. They have certain credit periods are there. But the problem here is when if you give someone a credit transaction, let's say the person for a 6-month credit period, until 6 months time, you don't have any money. So you have to invest that money on some kind of a customer for a 6 month. So to wait 6 months, if you put that money for a bank, you are getting a 6-month interest. Here you are not getting anything until 6 months. It's a risk. And what happened? The customer defaults. Customer become a irrecoverable debt or bad debt. Then definitely are running out of cash. Why? You gave the items, you sold some items on credit. You can have the customer, but the problem is cash flow problems, working capital problems, liquidity problems are coming. So you have to allow credit facilities. That is the competitive advantage because of the normally business organization, they are doing cash basis as well as credit basis. You can't decline credit customers because sometimes they're asking big orders. So it's very important to have this customer, you have to understand the customer. You have to have kind of like a faith on customers. So this credit facilities allowing is okay because business 99% of the now transactions are happening on credit facilities, right? So therefore, this organization has to be very, very careful, take extra measures to understand the customer, sometimes especially creditworthiness, trustworthiness of the customer, because some customers are there, credit customers, they just take their goods and everything and they vanish. So they are very important to avoid the bad debtors. That's the third reason, allowing too much of credit transaction. As a result, the danger that the business allow their customers too long for a payment, and this means that they are waiting for money and may actually be forced to borrow during this period unnecessarily, right? And third one, over borrowing also, like you don't understand what kind of a capacity that you can go, taking so much of loans, and at the end you actually have so much of loans and unable to pay everything, right? Business may borrow finance for growth, and as more loans are taken out, interest costs also rise, right? Interest cost, because bankers are always, they like to give loans because that's their business. But what happens if you are default, if you're unable to pay the loan? Sometimes if you're unlimited liability business, you're losing your personal belongings also. So avoid over borrowing. Business may try to raise more capital from owners, perhaps selling shares. Therefore, using banks, it's important, but you have to use it very wisely because always fixed interest payment, like a borrowings, are really dangerous for a business organization. Another thing is the seasonal factors, right? This is the fourth reason, the seasonal factors. Some of the business actually, they have a, like, for example, you take the textile business as an example, there are seasons and off seasons. Even hospitality, like not hotels and traveling business, there are seasons. Hotels, there are seasons and off seasons also. In textile business, there are seasons like Christmas season, January, and then April, like New Year, and like that. There are certain reasons are there. So other months are out. Okay, see, off season. So season and off season factors also taken into consideration. Sometimes if you trade varies of seasonal seasons in agriculture, cereal farmers have large cash inflow when they are harvesting period, in harvest is sold. For much of the year through, they have pay expenses for and cash flowing in. The situation require careful management, and although it is possible to predict these changes. So seasonal factors are very important to understand, especially when you engage in the farming activities and in your service businesses. There are seasons and off season. Therefore, you have to understand that the seasonal trends, and you have to, according to that, you have to plan your expenses. Okay, and the one is a unexpected expenditure. There are uncertainties are there always. business need to be prepared for an unforeseen expenditures. Like sometimes there can be political problems, sometimes there can be sometimes global impacts are there, and there are sometimes unforeseen machine breakdown can be happen, right? Some tax demand serious, sometimes governments ordering you to pay some taxes, strikes from the employees can be happen, bad debts. One of your big customers say he can't pay, sometimes he died. So how can you go and one of my friend who actually he was the actual businessman who was doing textile business. He allowed one customer for 1 million loan, 1 million items worth of items are given. But what happened? Unexpectedly, the customer died from a heart attack. Right? So my friend actually went to ask the money at that time. So the only at that time you can see the after the funeral, right? And the widow and the family members are there. They say, I don't know the transaction. We don't know about this record, his personal business, right? Personal transactions. I don't have money to pay. And the widow say, okay, now we have a only asset is remaining is his the vehicle. That's also tuk-tuk, right? Small trishaw. So like that, he gave it, he taken it and come. Because why? You can't recover the entire 1 million, but at least you can sell that in the market like about 3 lakhs, 4 lakhs, right? Like at least 30% you can recover. So that is something is better than nothing. Turns out he follow and then he taken that can claim. That this kind of incident can be happen. Sometimes you're losing 100%, right? No recovery at all, zero recovery. So this kind of unexpected event happened. Imagine the person will be like that. Sometimes the business will have a huge impact. Therefore, very, very careful to take insurance in that case. There are credit policies are there. You can take some insurance facilities for this customer insurance facilities. If you're exporting something, there are export insurance schemes are there. Because in all ways, import-export businesses, there are default transactions are there, right? Sometimes payments can be default. Therefore, you can insure those things like that. Unexpected expenditures can become like owners may be hit by unforeseen expenditure, and this might be caused by lack of experience or poor planning. And the other one is external factors. And the external factors, they mainly control like basically out of the control of the business, like weather conditions, changes in consumer taste and fashions, changes in the legislation, right? All that we call pestle factors: political, economical, social, technological, and also economical, ecological environment and global environment. So many pestle factors are there. PESTEL: political, economical, social, cultural, technical, right? Ecological, everything. So these factors are unforeseen. That mainly external factors out of the control. Right? When the political changes, you can't control. When there is economic changes, there you can't control. There's a global problem, you can't control it, right? There is a natural environmental cause, when there's a tsunami, when there's a flood, when there's a rain, you can't control it. When there's a power failure island-wide, you can't control it. So there's external factors also can be happen, this kind of thing during the past 2 years, from 2019 to 2019, 20, 2021. It's a very bad time for all the businessmen. Why? Because of the external factor, pandemic. Right? There are COVID winners and COVID losers. So COVID losers are very high, like 80%. COVID winners are very low, like 20%. Like IT companies and online businesses are the success, the winners of COVID. There are so many losers are there because of the customer. They can't come. A lot of business fail. They cannot even cover their overhead cost. So many problems are there in the economies, right? So these are external factors. The problem here is if you have this kind of a downturn in the economy, like called recession or depression, the global price of the oil sometimes can be fell. Many business and oil and gas industry started to struggle, right? Wise as always, you have to understand what kind of an impact is there. So you have to face these challenges. Sometimes business in this case, they're like a hibernated time. Hibernate means they are not like, it's like a sleeping time period. They're not doing any engaging in economic activities. They just survive. They just find some enough money to survival. Sometimes they would do some kind of like a method such as reduction of the number of staff or reduction of their salaries and wages, because countries was like no tourism, countries are locked down, so many problems have happened. External factors are really important. So survival is the main thing in that case without failing, right? So always there are so like a problem times also coming, good times and bad times are coming. You have to manage this very well. And finally, the cash flow problems can be created because of poor financial management. Sometimes you have financial the controller taking poor decisions, or you don't have enough, experience, like inexperience in managing cash or poor understanding of the way the cash flow in to and out of a business may lead to cash flow problems. For example, if a business plan to spend heavily just before they receive a large amount of cash from customers that have bought on credit, this is likely to face problems. It is careless to spend cash when it's not definitely there. So careful management is really important. Always cash flow management, savings is really important. Investments are really important. Financing is really important. Financial management. What are the internal sources, external sources, investment method, short-term investment, long-term investment. This is financial manager must be very qualified. So important is the sometimes the lack of financial management, the capacity. Okay, so these are the main internal reasons, mainly the why business run out of cash. So far we talk about these all 8 reasons: overtrading, investing too much in fixed asset, allowing too much credit facilities, over borrowing, seasonal factors, unexpected expenditure, external factors, and poor financial management. So that's the reasons why business run out of cash. 8 reasons we have discussed so far. Okay, now let's move on to the activity number 1, case study, Valtrex Construction. Valtrex Construction. Okay, I invite Leon. Can you read the case, please?
In 2016, Valtrex Construction, a specialist in the design and construction of wooden homes, collapsed, owing money to more than 300 suppliers. Up to 2014, the business had grown to $30 million in sales and was trading profitably. The directors decided to grow the business further after several new opportunities arose, and during 2014, the business recorded sales of $45 million US. However, it appeared that the company was growing too quickly and resources became strained. Valtrex was unable to raise the money needed to fund the new business. Banks refused to extend overdraft lending, and this resulted in serious cash flow problems. The failure of the business resulted in the redundancy of 85 staff and debts of around $12 million US.
Yeah, basically, this is what happened. Mainly, there are reasons. You can see the business failure. The mainly business has grown 30 million sales and was trading profitably. And the director decided to grow the business further after several new opportunities rose. But 45 million. However, it appeared that the company was growing too quickly. So overtrading capacity as the main reason. Overtrading, growing too fast. Right, resources became strained, and also Valtrex unable to raise money needed to fund these new business expansions. Yeah, you can expand, but Rome was not built in one day. Like that, you can take some time. Like that's why slow and steady means the race concept. If you do over trading, this kind of things can be expected. Okay, and they're asking 2 questions out of this case study: what is meant by over trading, and how it is possible for a profitable business like Valtrex Construction to fail. Right, so let's go to these answers. What is overtrading and why Valtrex actually failed in this case? Yes, so you can see the answer here. Valtrex Construction Company. What is meant by overtrading? Overtrading is likely to occur when the business tries to grow too quickly, right? Cash and other liquid resources get tied up financing the expansion of the business, and eventually the cash run out. And without cash, a business cannot trade. Without cash, business cannot trade, right? Question number 2, how it is possible for a business such as Valtrex Construction to fail, right? Okay, I'll invite Diana. Can you read the answer, please? Or Leon, can you continue this also?
It is possible for a profitable business to collapse if it runs out of cash. One situation in which this might happen is when a business is overtrading. If a business grows too quickly, it uses up liquid resources to fund the growth. This is exactly what happened to Valtrex. Up to 2014, the business had grown to $30 million sales and was trading profitably. However, the directors decided to grow the business further, and during 2014, recorded sales of $45 million US. The company appeared to be growing too quickly. Resources became strained and it ran out of cash. Profitable businesses can also fail if they get a large bad debt. If they are faced with a large and unexpected payment, or if they offer trade credit that is too generous, effective cash flow management is important. One of the main reasons for business failure, both profitable and unprofitable, is cash shortage.
Okay, very good. So cash shortage, you can understand. So cash is really important, the most important element. Like I think cash without cash flow, you can't do anything. So in this lesson, we talk about the main reasons why we talk about what is failure. We talk about 8 reasons why overtrading happen. Overtrading, growing too fast, investing too much on fixed asset. That's another example why people run out of cash without leasing, without going to hiring, you buying the asset, going to give 100% cash. Imagine you bought a vehicle by giving 10 million, right? So that's 10 million you are losing, right? So you can sometimes might be able to give a down payment of let's say 2.5 million, and remaining 7.5 million you can go for a leasing option. Then you can wait that 7.5 million you can keep for something else. It's like that you can do the leasing option sometimes easily, and allowing too much on credit facilities. That's another problem, cash flow problems coming, because cash sales are always okay. Why? Cash is coming, but credit facilities, if you give me 2 months, 3 months, 4 months, you have to wait for the cash without you do the sales, but you don't have money in the business. Over borrowing, sometimes taking too much of loans, that also becomes a strain on the business. And seasonal factors, right? Off season you have to manage likely, especially you have to forecast those things and to make some kind of strategies to how to right, off seasons and everything can be faced. For example, hotels and everything during off season times, when no tourisms are there, no tourist arrives, they promote the local tourist by giving discounts and everything. So local tourism they promote during that. Even now also like that, when there's a shortage of the foreign tourists in the countries, and they promote the local tourism to in order to survive there. And unexpected expenditures are coming. Sometimes you can insure those things. Sometimes machine breakdowns, sometimes shortages, sometimes fire. This kind of expenses can become. So you can take the fire insurance, right? You can take some kind of a risk management policies. You can take. External factors are coming, right? That's the most difficult thing to manage, external factors, because you don't know what's going on, right, in the economy. And sometimes natural environment incidents can be, pandemics are coming. So external factors, you have to go for like a strategy, like a hibernation strategy, just to survive only. You can, if you at least kind of a recession or something, if there's a world war something, you can just temporarily shut down the business and you can wait until everything comes back. And also poor financial management. You have to find out whether do you have enough knowledge and experience for the financial management. If you don't have a person to manage the problems financial, then you can hire some experts in the industry, some consultants in order to do that thing. Right. So now we can see in these examples we talk about mainly today about the financial management, importance of financial management. So lack of finance mean you can see both new and established businesses may fail if they cannot attract funding. So established businesses may fail to get funding because their track record is poor and therefore present too much of a risk for investors. Right? New business often struggle to attract funding because they do not have a trading history, like especially sole traders partnership. They are having some kind of difficulty of raising money. Lack of funding is a main drawback of the sole trader. And again, they are too risky for investors. And some businesses owners think that they can survive for limited amounts of capital by being cautious. This means that they might be undercapitalized sometimes. Right? What is undercapitalized? Starting a business with insufficient capital. Starting a business with insufficient capital. That's also a problem, right? Imagine you want to start a business, you need 1 million, 10 lakhs, but you have only 2 lakhs. How can you do the business? There's a problem. So if a business does not have enough money before trading begins, it will risk of failure is there. And arguably, this is a preventable problem. However, some entrepreneurs are so keen to get started, and they are underestimate the importance of starting with sufficient capital. So a lot of people, they say, we'll start. With or without capital, we'll start. They have an ambition, right? Big thinking. But the problem is they can't understand the capital is important. Because why? You can have the place and you have a small stock, but how can you actually survive without capital? So it's really important. Have some amount of enough money, like working capital. That's why normally businesses eventually fail. Like that's like about 5 years you have to survive. Sometimes you might earning continuously losses in 5 years, but still you must have the perseverance, stamina, right? The ability to actually absorb those losses. At least 5 years you can do like that. Definitely, next few years, couple of years, you can definitely earn profit. That is really important to have that kind of a stamina in the business organization. Survival should be the main business objective for the at least first 5 years. Okay, one industry then that often struggles owing a lack of finance is the restaurant industry, right? Why? Owners in restaurant industry frequently underestimate the cost of setting up a restaurant and fail to raise enough money before they open. It takes time to restaurant to become established, and it's the early stage of trading. Restaurants often burn cash. Consequently, many restaurants ventures are short-lived. A lot of fail in the first year. That is evidently you can see because you don't plan it properly. You say, okay, it's giving food, no restaurant. And what about the other things? What about the furniture? What about the waiting, the parking facilities? What about the like interior, the decor, the service? I think a lot of things because sometimes that's why like burning cash is that all restaurant industry you can see it's a very good idea. Look at the knowledge they are giving for us, right? Restaurant industry failed within 1 year. Most of the businesses, right? They don't plan anything. They think about the only food. What about other things? Restaurants should be like I know they think about a lot of things about the parking, about the dining facilities, about the atmosphere, about the weight, about the service providers. So many things are there to think about. But you need money for that, right? You have to plan it. So quality of food should be number one, but there are some certain other factors to consider, right? So in today's lesson, mainly we talk about the mainly financial problems. We talk about 8 reasons why business run out of cash. We talk about the case study also. Yeah, from tomorrow lesson, like we are going to discuss in my next lesson, the other reasons why business fail because not becoming a competitive, and I talk about how business can become more competitive in my next session. Okay.